Boy, that time flies when you're having fun. It's about that time of day again here, folks. It's Monday evening. Is that correct? It's already March, March the 4th, 2019. I'm kidding with you. We're here the first week of the month of March. Hope you guys had a great weekend break. Almost said holiday break there. But we're back in the action, though. Another big week of learning and earning opportunities. And, of course, this is your nightly newsletter. You know, I help traders earn consistent, reliable, dependable, predictable profits using a simple 3-step trading strategy that we execute together every morning in my trade room. And my plan tonight is to identify the best of the best trading opportunities I see setting up for tomorrow, Tuesday's trading session. And we're going to cover crude oil, S&P, Nasdaq, gold, and euro in tonight's video. I'm going to jump in here first over to the oil market. Oil got tossed around like a rag doll today, going up, going down, now going back up. As you can see here, the most important clue right now on this oil market is higher lows, lower highs, flattening out moving average. It's a range-bound market. Anytime I have a range-bound market, my plan is pretty simple. I'm going to buy low. I want to sell high, and we're going to use that 1-2 try failure pattern. 1-2 try failure pattern to buy those lows and sell those highs and staying away from that middle. I'm going to break down the different ways I want to buy low and sell high. Also, what a breakout will look like here on the crude for tomorrow. Over on the S&P, talking about getting tossed around today. Boy, the S&P had this just collapse right in the lunchtime session. And then, of course, a very miraculous, right, a 1-2-3 reversal. So we are bullish, believe it or not. But believe it or not, bullish here into the closing bell here tonight on the S&P. But, you know, make no mistake here. The big clue right now is this tiny trading range. And yes, this is the same trading range from last week's price action. So we're going to talk a lot about, right, what we call the pendulum swing, you know, the amount of the move below that trading range, right, and the amount of the move above that trading range, right? So we got one hell of a target for that S&P for tomorrow. So we're looking to get long here on the Emini. I'd like to do it sooner than later. I'm trying to use this little hidden channel here, try to find my way in on, right, that pendulum swing all the way back up. So that's going to be a pretty easy chart there to play with here tonight on the S&P. We'll also put together some sell setups here and we'll look for if the market turns bearish on the ES as well. Over on the NASDAQ is very similar, right? NASDAQ very similar to its buddy, the S&P here, still have that trading range. Trading range, much like the S&P, is the main component here right now. But make no mistake about it, we have a much smaller pendulum swing, right? That pendulum swings down, pendulum swings back up. Pendulum swing is nowhere near as dramatic as the S&P, but I definitely have that as a target now at 71, 73 and a half there. I've got that same hidden channel. I'm drawing off those highs. I'm bringing it down off that low. Fits like a glove at those lows here. So we'll try to use those lows for some buying opportunities. I'm going to put together all the entry setups I'm looking for, whether or not we hold that channel or maybe we actually drop here and go even lower. So we're going to take a look at that in a moment here on the NASDAQ. Hopefully it pulls back here for us before too long. And then speaking of ranges, yeah, the gold market here tonight, gold is also in a trading range. Got that pretty obvious strong bear market into that trading range. Trading ranges always tell us to buy low, sell high, use the 2-try rule. This one has a bearish momentum to it. So it tells me there are specific types of those entry patterns, both buying and selling, I'm going to look for tomorrow. I've got this pendulum swing below the range. I'm going to use that in combination to find key levels of resistance. I've got two types of patterns here. One for a sell and one for a buy, believe it or not, off of that low. We're going to grab a look at that in a moment here for both sides of this market on the gold. And then I would assume probably the hardest chart here, probably the most challenging of all the price action here for us tomorrow is going to be over on that euro. Looking at the euro here tonight, we've got, again, a trading range is a big part of this analysis, but we have one hell of a move lower here. Very strong move lower until we bounce right into that that low we talked about last week. If you recall from last week, we were wondering, buyers kept getting rejected up top around those highs of the range. And we said, what's probably going to happen is we're going to probably end up running lower and then running right back up, right? Attract more buyers, give those buyers a chance to jump on once again. So the idea is pretty simple. We're trying to go back into that range here. The bottom line is we're too low to sell right now. I don't want to being a seller on this euro is going to be tricky. We'll put together the plan for a sell, but really I'm hoping we're going to see some sellers try to chase after this, and hopefully we can get them in trouble here and buy into their stops for that move going back up. So I've got a lot to cover here for you guys in tonight's video newsletter, but as always, I want to make sure you never miss another great video. And to make sure you never miss a great video, definitely make sure you join our mailing list. It's right here on the blog at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video here tonight. But make sure you give me your name, right? Your email address. Yes, a real email, right? I'm not going to spam you on this stuff. I don't sell your information, right? I want to make sure I send you an email, though, every time something new is published here at School of Trade. Hit that subscribe now button, and then make sure you check your inbox, because in your inbox, I'm going to send you a welcome email with all kinds of goodies so you can get the most of our time together here every evening on this video newsletter. So make sure you join our mailing list and then check your inbox, right? Check your inbox. And then don't forget, right, tomorrow morning, we'll be executing this strategy together in our trade room with all of our members. If you can't be there with me, the next best thing is to download all the charts. All the charts that I'll be using tomorrow in our trade room will be attached below the video tonight here on our blog. So if you're here on the blog at Sideways Markets, just scroll down and you'll see all the charts ready, right, for tomorrow's trading session. That way you have all the charts that I'll be using if you can't be with me tomorrow in the trade room. At least that's, right, the next best thing there for you. And don't forget, while you're down there, if you have any questions, any comments, any concerns, any feedback, any ideas for other video topics you want to see me cover, that's what the comment section is for. So don't forget, drop me a comment in the comment section while you're down there. Give me a thumbs up if you like the content in today's video. And again, any other ideas you have for videos you want to see me cover, make sure you put those in the comment section as well. And then as always, don't forget, I'm always here. I'm always here to help, right? Don't be a stranger. If you ever have any questions about getting started, software, computers, brokers, right? Whatever, right? Whatever the questions are, don't be afraid to pick up that phone. Call me in the office. I got a toll-free phone number. If you don't want to call the phone number, if you're out of the country, right, there's a live support tool right there as well. You can always use live support. Very, very easy, right, for you to contact us here at our corporate headquarters in Los Angeles. And so on that note, let's dive right in. You guys know the deal here. Grab those charts. Right, grab those charts. That way you're ready for tomorrow, and come join me and we'll execute the strategy together, right, in our trade room. All right, let's jump in. Another busy week ahead of us here. Let's take a look at what the schedule looks like here going forward here right now. Again, another busy week here. First of all, it's the first week of a new month. As I talked about last week, as we transition from the end of one month into the beginning of a new month, we almost always see a lot of changes in the market personality, and that leads to increased volatility. So volatility is definitely on our radar right now, right? And we saw a lot of it right here today. Now, I've got a little bit of a cheat sheet. There's a lot going on here this week. So let's go over some of the big, kind of the big impact stuff that's happening here this week, because I always like to kind of give you an outline at the beginning of the week. That way you kind of know what's happening as we go into the rest of the week. First of all, tomorrow is Tuesday. The big news for tomorrow in both the overnight and the U.S. session is we've got that home sales number right at 10 a.m. Eastern time. So tomorrow morning, the big kahuna, the big meat and potatoes tomorrow, we're going to be at 10 o'clock Eastern time. That's where everything probably will be the easiest tomorrow, in between that 10 o'clock and 11 o'clock hour tomorrow. So tomorrow morning, make sure you're there with me in the trade room. We'll get the charts all prepped up. We'll obviously look for whatever we can get our hands on, but I would expect to see the big moves here tomorrow, right, at 10 o'clock Eastern time, or let's say after 10 o'clock, right, 10 o'clock to 11 o'clock, right, tomorrow morning. Over on Wednesday, got a lot happening on Wednesday. Wednesday, of course, we get the ADP employment report at 8:15. We also have that crude oil inventory report. That's going to be 10:30 a.m. That's crude oil inventories. So that'll be coming out right on Wednesday as well. So quite a bit of news on Wednesday. Thursday, right? Big day on Thursday. We got two big things on Thursday. One is the ECB announcement, ECB meeting, ECB announcement, very similar to the FOMC announcement here in the U.S. Gold, currencies, those are the two markets we're watching as we go into Thursday. And of course, we're also watching rollover. You're probably seeing some pop-ups or some emails from your broker right now. We are also watching rollover on the E-minis. The euro and the currency futures will be next week. And then, of course, Friday, because it is the first week of a new month, Friday is that non-farm payroll report at 8:30 Eastern time. So keep that in the back of your mind as we get later in the week. A lot of this stuff we'll talk more about right as we go through the rest of the week, but I want to give you a good roadmap for what's really important, right, coming up this week. And then don't forget, depending on whether you're a night owl or you love the sunshine, I tend to be the latter. Saturday evening into Sunday is... Drum roll, please. Yeah, we're getting our sunshine back here in the U.S., right? Daylight savings time begins in the U.S. Now, I'll tell you, in my household, it is a firm yes, no. We're split in my household. Some people in my household hate daylight savings time because the sun stays up too long. And, right, I personally love it when the daylight savings time kicks in because I'm kind of a, carpe diem, right? Seize the moment, right? Take advantage of as many drops of UV we can get every day, but not to worry though. All kidding aside here, no matter what time of what side of the aisle you're on with daylight savings time, clocks will spring forward by 1 hour Saturday into Sunday. So next week, if you're outside the U.S. or if you're in one of those weird states, what is it? Indiana, Arizona, right? There's a couple states out there that don't abide by this stuff, right? Sometimes I wish we were one of those states here in Los Angeles. But bottom line is clocks are shifting forward on Saturday and Sunday. So next week, right, make sure you're aware Eastern time will be Eastern Daylight Time, will be 1 hour later. All right, I don't want to take up too much time about daylight savings time tomorrow. Big news tomorrow, 10 a.m. Eastern time. That's going to be our big meat and potatoes tomorrow, right? That 10 o'clock Eastern time. We also are listening in closely right now. We've had a lot of chatter in the trade room from OPEC regarding oil prices. We heard today about Russia changing some things around, so that's what led to a lot of the oil back and forth here. And of course, we're also looking at, right, the China-U.S. trade talks. We have the People's Republic, I can't recall the exact acronym, but we're going into a very important legislative meeting in China until the middle of March. And so we are probably going to start slowly hearing more about these U.S.-China trade talks. I would certainly hope so, right? This dog and pony show has been going on for weeks now, a very well orchestrated, the China-U.S. trade talks, but we have yet to hear much at all besides the daily back and forth of, oh, we're good, no, we're bad. Oh, we're good. No, right. So we're going to hopefully see some closure to that here this week. There's also that kind of Mueller report maybe coming out this week too. So that might shake things up at some point as well. So we're going to be keeping our eyes and ears open, right, this week here to kind of see what we get, right, that's not scheduled, right? OPEC, China, right? The Mueller report, I'm not sure if we'll hear about any of those this week, but those things I'm also, right, keep my eyes and ears open for in our trade room as well. All right, a lot of time there spent on the news, but again, first day of the week here, I want to make sure I gave you guys all the good stuff on that. Let's jump into some charts here, and let's get this party started here. Now, let me clean this thing up a little bit here. Battle zones above and below, no trade zones right in the middle. Again, you'll see all of these charts will be attached below the video tonight here, right on the blog here at Sideways Markets. Now, first things first, what type of day are we dealing with right now? It's a range-bound market. A range-bound market tells me buy low, sell high, avoid the middle, and use the two-try rule, right? Use the two-try rule. So I want to buy low, right? Buy low. I want to sell high, and I want to stay the heck away from that middle. So the most important thing right now is this no trade zone. We are staying well away from that no trade zone right now on crude oil. And I'm telling you right now, this is always so much easier said than done, isn't it? It's always so much easier to say, yeah, stay away from it. But I'll tell you, there will likely be some patterns in there that you just don't want to, you don't want to do anything with, right? You want to stay away from those patterns in the middle of that trading range. My goal is is to use a combination of the 2-try rule along with the moving average. So for example, let's say the market goes higher here. If I want to be a seller, right, what were some ways that I could be a seller here right now? There are ultimately 2 ways that I could be a seller. One is the market going higher. I see the market going higher. I'm going to wait for a pullback to the moving average, look for those buyers to try to buy off the moving average. That constitutes now as the 1-2-try failure, and I'm going to look for that sell now going back down into that range, right? We call these a 1-2-try failure. We go up, that's 1, we pull back, that's 2, and then we look to sell it back off that high. You can see a good example right here, right? 1 try, pull back, 2 try, failure, back down into that trading range. Now, another way to be a seller would be if we see a very strong move up, right? Very strong move up. I get a measured move waiting here overhead, right? Sellers, of course, can use that as resistance. But if we see a real strong move here, right? Real strong blitz higher. If I see a real strong move, what I like to do is I like to use what we call a nested 2-try, which is a little bit different than that original version I gave you before, right? It looks like this, 1 and 2. So instead of using the 1-2 failure, I go one step further, and this is a much better setup if we have a lot of strong trend, right? A lot of strong momentum, right? We call that a nested 2-try. Okay, what's the difference? Momentum. Momentum is the difference between those 2 types of 2-try failures. So we're talking about selling here right now. What if the market runs lower? At what point could I try to sell this market as the market runs lower, right? We're talking about selling opportunities right now. How would we sell this? Well, of course, you can see I've also got a measured move listed here, right? 1 leg, 2 leg. There's the measured move. And this is a very big level of support down here, so I don't want to be buying. I don't want to be selling it as support. So what I really have to do is I've got to get what we call a 1-2-3 breakout, right? A 1-2-3 breakout. And it's just like the name suggests. Strong move outside the range. That's the key. Okay. I'm not talking about a strong move down. I'm talking about a strong move outside the range. Okay. You may see it do something like this where it goes down, up, down, up. No, strong move outside the range, right? Strong move outside the range. Okay, then pull back to the moving average. And then we get to see a strong move off of that moving average. Okay, this is what we call the 1-2-3 breakout. 1, 2, 3. Okay, got to be a strong move outside the range. Got to pull back to the moving average. Got to see a strong move off the moving average. Now from there, I don't want to chase after it because now we're way too low to sell. So what I do is I mark up that prior low and I look for a sell off of that prior low. What I like to do is to make a hidden channel out of it. I'll mark up those lows. I'll usually find some confluence up here off some highs, and we'll sell off of the combination of that swing into that hidden channel. And the entry pattern we'll use pullback patterns, trap patterns, possibly even a buyer failure pattern, right, if it goes back above that moving average. Now, speaking of buyers here right now, what would a buy pattern look like? Well, buying, I want to buy at the low of this range. So, for example, if we try to get this market to go lower here right now, depending on the momentum we see in the market as it pulls lower, I can look for a typical 2-try failure. 1, 2, back in, right? Let those bears try once. Let those bears try twice. We'll buy literally right into their stop losses. Okay, now, if momentum is much stronger, strong move down, real strong momentum now what I'll do is I'll shift my focus. I'll be a little bit more disciplined, patient. 1 try, 2 try, and then back up from there. So if I'm a 1, right, if I see a strong push down, let those bears try once, let them try twice, and we'll buy going back up into that range. And again, what was the name for that one? That was called the nested 2-try, right? Because it's inside that first try. Now, don't forget, guys, I have a great free trading class here at School of Trade that will teach you all about these 2-try patterns, the nesteds, the major 2-tries, the 1, 2, 3 breakouts. I'll put a link right up top here for you in the upper right-hand corner, right? So grab that link. I'll also put a big button right below the video tonight on our blog. If you're brand new here with me and you want to learn more about all the different setups that we use every morning in our trade room, grab that free trading class. It's linked up in the description description of the video, below the video on our blog, and of course, right, it's linked up in the upper right-hand corner as well. So we want to stay away from the middle, right? We want to buy the low, sell the high. What if the price starts jumping? Could I buy up here? I can, as long as I get that 1, 2, 3, mark up that high, mark up that, right? Mark up that channel. And again, what I'll typically do is find some confluence there, draw that channel, and look for that buy right off that channel low. So a very, very good setup if we can get that 1, 2, 3 right range breakout. Okay, so oil is pretty simple. The hardest thing right now on oil, you guessed it, is just staying patient, staying away from this middle. And again, don't forget, 10 o'clock tomorrow morning, we get that big ISM number, which is usually almost a guarantee to shake these oil markets up here pretty good. Let's keep going. How about some S&P here tonight? S&P is full of clues here this evening. Now, I always like to ask myself, right, when I first start off each session, I always ask, what type of environment are we dealing with? What are the market conditions that we're dealing with right now? And here on the S&P, the market conditions are really nothing more, right, than one big range. That's all it really is. Now, looking at it from a kind of a blanket point of view, it's kind of one big range like this. And you know how we roll, right? Buy low, sell high, buy low, sell high, right? Just as we talked about on the oil. So we definitely want to buy low, sell high. That's the easy part here. But it's actually this little tiny range here. That's the actual range that that's kind of the epicenter, right, of this market right now. And we know this because if you recall from last week, we took the pendulum swing. And you're going to see a bunch of these pendulum swings here in tonight's video. But we took that pendulum swing, right? We took the amount of the move below that range. And remember this from last week when I'm sure a lot of you guys thought I was crazy for trying to give you a target up around that 28.20. If you go back to early last week, that was the target, right? That was the target for the end of the week. And sure enough, it took a little bit longer than the week, right? It took them a little bit longer. They didn't get it until Sunday night, but they finally got that pendulum swing all the way back up. So that really, for me, what it does for me is it really confirms for me that is our range. When I see a pendulum swing down, pendulum swings up. And again, all it is once you find that trading range, then find the amount below it and the amount above it, and that'll make for easy pickings, right? That will at least confirm that trading range. And then once you know you have your trading range, then you know buy low, right, sell high, and wait for those big breakouts. So now that we know we have a range-bound market, we know we want to buy low, we know we want to sell high, we know we can use this pendulum swing. Okay, so now there's my trading range. We go all the way below, and now we're trying to go all the way back up, right? Now the new objective is 28, 26 3/4. Now, is that going to be tomorrow? Guaranteed, right? Signed, sealed, delivered, right? Just give me the money now? Probably not, right? As we saw last week, right? It might be a couple days before we get to that target. Hopefully it's not. Hopefully we get a nice rally right higher tomorrow. But that is the objective right now for those buyers. Some of the buyers right now are trying to get long. They're trying to finish off at the very least, right? They're trying to go back into that range here right now at the very, very least. And I'd like to participate with them. Now, I had some clues over here before. I'm going to bring those back here, right? So you know kind of what I'm looking at right now. So we definitely have some bullish momentum, right? Not to discount the extreme bearishness that we saw earlier today. There's definitely no doubt about the bearishness we saw earlier. The question really is the 1, 2, 3. This is no longer a bear market. So knowing that this is no longer a bear market right now, we want to be a buyer. I want to buy now and try to get one more leg going higher. And then who knows, right? Maybe we get another one of these little shows and we get a nice big rally off that short covering rally. So trading range, I want to buy low, sell high. Bull momentum, right? I want to buy at support. So where would be a great place to buy at support? Well, we're going to do this in the Nasdaq as well, right? Couple examples of this right now, but I've got a great spot here to buy at support. I'm drawing off of these highs. That fits like a glove. I'm bringing it down to that low, and that's giving me a great level of support there. Now, I could also go one step further. I could draw off this high, right? Draw off that high. bring that one down, and literally this whole area now becomes the area of interest, right? This now becomes where we're looking for those buying opportunities, right, down inside that battle zone. So this whole area here, right, whether or not this is the channel, I don't think that's your channel right there, but I wanted to kind of show you how you could add a little more depth to this chart. I think this can be the much better fit here right now just because of the way the highs line up there. So I think that's going to be the better of the two channels. But, again, I've got my eyes on both of them going into tomorrow morning's trading session. So really right now, it's just all about trying to get long at support. That's really all it's all about, right? I got a couple swings down here. I got pullback. I always like to go back in time and look at the last two swings because there are always going to be buyers waiting below those swings for traps. Right. In fact, that definitely sets up for, right, the first potential opportunity here. So let's zoom in on this a little bit closer here and let's get a little more intimate on what we can look for here. First of all, we're bullish. How could I be a buyer on this market right now? There are, in my opinion, there's two different ways to buy this. One is going to be a pullback. That's the easy way, right? The second one would be a very aggressive, right, trap after a very aggressive two-try failure. So two ways to be a buyer here right now. What I would love to see is I would love to see us, right, get a nice pullback here. If I can get a pullback to that low now, I can look for a combination of a trap. Let's make that a little bit easier to see. A trap into, sorry about that. A trap, right, is your prior swing there. I want to see a pullback. That will set up into a beautiful combination here, a trap into two-try failure, into breakout pullback, and up from there. Now, follow the bouncing ball on this, okay, guys? Anytime we have a market, right, that rallies up like this without really any deep pullback, we know there are buyers literally waiting down here, right, waiting down there to buy that dip. And they probably have their orders, right? I don't think you need this stuff, but if you had one of those fancy-dancy order flow softwares that I think is a big waste of time and money personally, right? But I'm sure somebody out there makes money off selling those things to us, right? Not using them. But I'll bet if you had one of those fancy pieces of software, you would see a bunch of buy orders, right, sitting here, right? 100, 115, right? You'd see a bunch of, right, buy orders just stacked up here, right below that low, because as the market goes lower, buyers want to buy into it, right, and get that market back up. So that's where the first setup comes in. That would be your trap entry, right? That'd be your first one. It's called a trap pattern. Now, from there, we then also count this as the first try for those sellers. This becomes a second try for the sellers, if I can type here, and of course that becomes the failure pattern. This is the same failure pattern we talked about earlier, right, on the oil market. Then from there, right, we get the pullback into that pullback pattern. So what happens is we go up, we trap, we fail, we break, we pull back, and we go. Right? There are three patterns in there that, we may not get all three of them. We probably won't get all three of them, but we'll definitely get at least one of them tomorrow morning if we get that pullback. And again, as I mentioned earlier, if you want to learn a whole lot more about traps, two-try failures, and that breakout pullback setup I'm mentioning here today, grab that free course in the upper right-hand corner or grab that big button below the video tonight here on the blog and get started with that free course. That way you learn all about my favorite entry patterns. Now, what if the market keeps going higher here? Right? What's the plan if the price keeps going higher? Because if you get a pullback, that's the easy one. I've got a 1, 2, 3. Now, at this point, the market's bullish. If you want to be a little bit more aggressive with this, look for a 1, look for a 2, and a trap low. This is very important that you follow the rules on this, right? I want to see 1, I want to see a higher high, a 2, and then I want to see that trap low. That will be your entry. It's about as aggressive as it will get, right? But hey, like I said earlier, if you want to be a little more aggressive with this, 1, 2, trap low, that's another option right, for those buys. It's almost like a reverse crown reversal, right, or an inverted crown reversal, right, for that buy. I don't want to buy high. I don't want to buy the high of this little channel here, and I don't want to buy into the high of that range at 2,800. I want to get long before we get to that 2,800 top of that trading range. So that's going to be the goal for the buyers here now tomorrow. Now, one more scenario here. Nope, that wasn't it. One more scenario here. What if we go sideways up here, right? What if we end up back inside the range and we end up going to sleep on us here? What's the plan then? If we see a trading range now, take the size of that range, bring it down, create that level of support. Okay, we call those range expansions. Then with that level of support, look for that two-try failure pattern, 1, 2, the same type of pattern that we talked about, right, on the oil, right, 1 and 2. Then, as we blast higher, look for that same aggressive pattern, 1, 2, and go from there, right? So 1, 2, and buy from there. So there are 2 long patterns I'm looking for if we go into a trading range, okay? That's if we go into a trading range, okay? So pretty easy. As you can see, if we go up, we go down, or we go sideways, I've got you covered, guys, right? Got you covered. And of course, we're going to execute this plan together tomorrow in our trade room. But real quick though, how do we turn bearish? What does a bear market look like? Strength move down, pull back to the moving average. You got it. Strong move off. Remember, don't go cheating on me here. Don't go cheating there and try to sell that, because you know what's going to happen? You try to sell that pullback, it's going to whoop and right back up, right, to retest that high, because don't forget, right, that's a 1, 2 try failure setup, which you'll learn all about in that free trading class. So again, it's the 1, 2, 3 off the moving average, mark that low, mark that low, mark that high, and again, failure, trap, pullback as we go back down now. Where's my objective? Back down to retest that low at 27.67 and a half. All right, very, very simple strategy here on the S&P. Relatively simple, right, when it comes to trading strategies. Now you get the plan here for both up, down, right, long, short, or sideways. How about some Nasdaq? Now the Nasdaq is it's the same, species, but it's a little bit different breed, right? It's definitely a range-bound market, the Nasdaq, but you'll notice one big difference, right? The S&P market, there's 2 big differences in the S&P. The S&P hasn't gone back to retest that range top yet. And there is a huge pendulum swing, right, setting up here on the S&P. The Nasdaq is a little bit more timid, right? The Nasdaq's not as dramatic. We still have that trading range. Still a little bit tricky, right? You can see there that momentum swinging back and forth here, right? Got your trading range. You got your pendulum swing, right? The amount of the move below the range is the amount of move above the range. That completely confirms for you that that range is numero uno right now. It's the jefe. It's the most important part, right, of this market right now, this personality, this price action. So now knowing that, right, I want to buy low, I want to sell high, and I want to avoid the middle. So you can already see why this is going to be a lot more difficult, right? The S&P looks like a walk in the park. The Nasdaq could be a little bit challenging here right now. So again, I always ask myself, what's the market conditions? We're range bound. Okay, well, what is the direction of the market's momentum? Momentum is bullish. In fact, it's not just a little bullish. It's quite bullish. Right, you can see a great example of a move lower, 1, 2, and then up we go back in, right? That nested 2 try. Big move down, right, and then back in. So now that we know we have that strong momentum, let's see how many of you guys and gals watch my newsletter every evening. What's the rule? Anytime we see a strong move in one direction, what do we expect? We expect a 2-legged pullback and a retest of the high, or a retest of the low. Right? In this case, it's a strong bullish move. So although I'm at the top of this trading range, I do think we're going to get one more leg higher. Another reason why I think we're going to get that leg higher, again, because that strong momentum, but more importantly is the pendulum swing. the amount of the move below the range should be about the amount of the move back above the range. And that one puts me at 71.73.5, right? This is quarter point, right? Quarter point increments here on the Nasdaq and the S&P. So we have a nice strong bull trend, nice strong bull momentum, right? It's important you don't use the word trend because trend can be used in many different ways. Momentum. What direction is the market's momentum? Momentum right now is bullish. And it's not just a lazy bull market, right? It's a very strong bullish short covering rally. So anytime we see a short covering rally with this much pep to it, we know we're probably going to see that next leg higher. And then where's our target? I'm looking for that 71.73, and maybe we get lucky and hold a runner up at that 72.11 right up to retest that high. We'll see how it goes, right? We'll see if we have time to get that big runner tomorrow afternoon. So the first things first is we know we're bullish. We know that, although I don't really like to buy the high of a range, this particular scenario definitely warrants it. We have momentum. We have the objective, the pendulum swing. So now I need to find a level of support. Right? The key is to find a level of support now that I can use for this. So anytime I see a 1, 2, 3 reversal, right? I mark up those highs. I find my new channel. Looks beautiful, this one, right? I did have that channel a lot steeper, but it just didn't fit as well. You know, sometimes certain channels fit better. This one fits really well, right? Off of those lows down there. So that channel really fits well. I think that's going to be a major component here for us. And so, of course, with that being the key level of support, I'm looking for a pullback. So how do we buy this market? There are basically two ways to buy it. One is the pullback. Two, of course, is that 1-2 trap, which is really going to be on the aggressive side here for us on this Nasdaq. So let's put this together here right now. What are some different options we can use here to buy off of that low? Well, you know, here's one pattern I haven't talked about yet, and that is the two-legged pullback, right? Look for a possible two-legged pullback. Instead of a straight line down into a failure and then back up, what if we get a two-legged pullback? In other words, what if we pull back, we go up, we pull back again? Draw a trend line over. Now that trend line can be used in combination with the two-try failure pattern for a much better entry off the low or off the trend line itself. I'm not going to use the trend line as resistance. I'm going to use it as a level of support. So that's the basic idea there behind a two-legged pullback. And again, we called those the 2LP, right? Nickname those the 2LP pattern. So again, bull market, want to buy at support. Another option, of course, would be a strong pullback, right? Moving average comes over. Sellers try to sell off the moving average. What do we get? We get a failure. That failure allows me to buy low into the stops of those bears. And then, of course, we're buying the pullback from there. Same patterns we talked about earlier. And again, you can learn all about those patterns inside that free course in the upper right-hand corner, right? Or just below the video tonight on our trading blog. So there are three patterns I just talked about: the two-legged pullback, right? The two-try failure, and the breakout pullback pattern. Another valid pattern as we go higher here is the 1, the 2, and again, make sure you follow the rules on this one. Trap low. Let those bears try once, let them try twice, and the real key to this pattern, guys, is going to be before we get to that 71, 73 and change. Okay, what I don't want to do is I don't want to take that trade long after we reach that pendulum swing. Probably not going to be a very reliable pattern at that point. At this point, we have time to get in if we get that set up. Okay, now another thing you want to keep an eye on for tomorrow is what if we end up running higher here and then we go sideways inside of that range? Then what do we do? This will be a very tricky scenario because if we go sideways now, I can add that range expansion and I can look for that 1, 2 and back up to retest the high. Okay, so you can look for that first pullback, 1, 2, and back up to retest the high. But then once we get back to retest that high, they'll be very careful trying to buy high at that point. In fact, at that point, I'll be looking for that 1, 2, and then back down into that trading range. The moral of the story is that anytime we see a strong move in one direction, we look for that pullback and a retest. if we get that deep pullback, or if we get that little trap pullback, or if it goes sideways up here and we have to wait for the pullback, right? I'm looking for that first pullback because that will be a reliable trade even though we're above the high of that range. Why? Because of momentum. Momentum is so strong on this right now. Now, another thing I'm obviously watching for here is what if we pull back in the overnight and we end up back here tomorrow morning just chopping around going sideways. If we get stuck in that trading range, now pretty much all bets are off. And now we look for the 1, the 2, the failure back in, the 1, the 2, the failure back in. Same basic plan we talked about on the oil market to start off today's trading session. Right? So if we do end up going sideways, if it gets sucked into that middle right above that, 71.30 to 71.20, that's going to be your cue to sit tight, sit on hands, use duct tape if you have to, right? But don't force them outside that trading range. Again, looking for that nice pullback, that 1, 2, and go. If we don't get it, if it sits there and goes goes sideways like a slug, right? I'm going to sit here and wait for that breakout pullback as well. Not expecting a reversal on this. What would a reversal look like? A 1, 2, 3 reversal. We're marking up that low, and selling on that. I don't see that being a very easy trade tomorrow. I don't see being a seller very easy on this unless we end up going back into that range, spend a couple hours there tomorrow morning, and then 1, 2 back in. That will be a sell, a 2-try sell. And again, I'm kind of illustrating these right now, but you can see hundreds of examples of those 2-try failures by grabbing that free course in the upper right-hand corner. But I'll tell you right now, though, if we end up back below that range, trying to sell down here, no, probably not. Probably not. We're going to be looking for those 2-try failures to buy going back up into that trading range. So a relatively easy, but again, really important, right? The momentum combined with the pendulum swing gives me a great, very small, but very profitable opportunity here, right, to earn a profit on the Nasdaq, right? And again, we outline both sides of this. Okay, how about some gold here right now? So we have a bunch of ranges here, right? Ranges on the S&P and the Nasdaq, ranges on the oil. Well, we don't want gold to feel left out, right? Gold also has a range here as well. So of course, what do we have here on gold? I always start off by asking myself, right, what's our market conditions right now? This is a range-bound market. Range-bound markets tell me to buy low, sell high, right? Fade those breakouts, avoid the middle. Okay, you can see a great example here of a bear market this morning, right, into a trading range that pretty much is kind of engulfed this whole market, right, from literally 3 o'clock this morning now until about, almost 5:30 Eastern time here, right, this afternoon. So it's definitely no surprise here right now. Market's bearish, market's inside of a range. What are some ways for us to sell this market, right? I want to be a seller. It's a bear market. I want to sell at resistance. Well, there's a few different levels of resistance right now that I've got my eyes on. One is the pendulum swing, right? The amount of the move below the range is the amount of the move above the range. That's a key level of resistance. Another level of resistance coming off the trading range itself, I take that trading range. You'll notice the size of the range breaks down to find support, break up to find resistance. So this is a major level of resistance up top here, right around that pendulum swing. Nice and convenient there. And then you'll also notice I've attached a trend line off of these lows, bring it up to that high, and that also creates a level of resistance. In fact, I considered making the battle zone here really this whole area, right, up overhead. That whole area up there is an area of resistance. So that's definitely where I want to be looking for a sell. The hard part now is just waiting for the price to get up there. Now, if it's okay with you, I'm going to get rid of this channel here for just a couple minutes here, just to kind of make it clearer here for us. I want to move that over there. That way, that's not in our way here. And I want to be a seller, so what would be some selling options? There are basically two different sell setups I'm looking for here as we go back up now to finish off that pendulum swing and to get up into that range expansion area, right? One scenario would be a relatively decent move, a pullback to the moving average, a 1, a 2, a failure. That failure, of course, then pulls back and gives me a shot to sell back down again. Again, we call these 1-2 try failure patterns. They're very, very common in range-bound markets. You can see one down here, 1, 2, and back up, right? Very good example there, going back up into that trading range. So again, I want to be a seller. I'll let the market go up once, twice, and then back down in. Then from there, I'll look for that breakout pullback as we go. Now make sure that breakout pullback pattern is above that range, right? You really don't want to be selling into the middle of that range here. So make sure you're staying focused on selling above that high here. Okay, now what else can we use here? Well, let's say, for example, the market really runs, and it runs up to that 95, which is that second range deviation. When we hit that second range deviation, usually that means momentum is really strong. And if momentum is really strong, now we want to wait for that nested variation, 1 and 2, and then back down from there, 1 and 2, right? And then we look for that sell back down. Just a slight variation of that 2 try failure pattern. And again, it has everything to do with momentum, right? And we'll talk more about that in our trade room tomorrow morning. And you can learn a lot more about momentum and how we use momentum in that free trading course. Now, those are the sell sides here. What about being a buyer right now, right? Could I buy this market? I could. If I see a market, right? If I see the price run lower here now, the market's a bear market, so in order for me to be a buyer on this, what I really want to see is I want to see a nested 2 try. 1, 2, and then up from there. In other words, I want to let those sellers exhaust themselves before I go buying into their stops. And the reason why I do that is because a lot of times what will happen is on a range-bound market that's bearish, what will happen is you'll get a shot lower, and you'll see sellers literally waiting right above that high, and they'll run it right lower again, right? They're kind of waiting for that little trap high up there. So what I do is I don't get into too aggressively when I'm going against the momentum, right? I wait for those sellers to try a second time. Then I know the bears are all in. And once I know the bears are all in, I usually have a rising support trend line here, and I can buy right into those stop losses. And then, of course, I can use that pendulum swing, measure the size of the move lower, size of the move higher, and that becomes the target on the opposite side of that trade. It's a relatively simple idea, right? When the market is bearish and I want to be a buyer, I want to let them try once, let them try twice, right? Let those bears tire themselves out. Then we'll buy right into those stop losses, right? Then we can make that buy decision and go back up into that trading range. Now, what does a breakout look like, guys? Breakouts, 1, 2, 3, breakout, right? Breakout, 1, 2, 3, breakout. It looks like breakouts are really easy, but they're not as easy as they look at first, right? Strong move higher does not mean a breakout here, right? It's got to hold that pullback and jump. And I know we don't want to wait for the pullback to hold. I know we all want to be in on that pullback, but the problem is that pullback is not a reliable pullback. What is much more reliable is to mark up that high, mark up that new channel now, and look for that buy, right? Look for that buy now at the low of that channel. That's a whole lot more reliable, right? A whole lot more reliable, right, is the low of that channel. So that's the idea for that breakout. And if we do get that breakout going higher, I would imagine that 1300 is an easy target we're looking forward to tomorrow here, right, for those buyers. All right, guys, so gold's pretty easy there on the gold tonight. Let's see what we get for tomorrow. And then I have to warn you, this is going to be the most difficult chart of the evening here tonight over on the euro. Now, again, I always like to ask myself, what are the overall market conditions that we're seeing right now, right, on this, in this case, on the euro. As I zoom out, right, it's very, very easy to see that trading range from last week, this is a very strong move outside of that range. And it looks like now if these sellers, right, which of course bounced off of that, again, that big low, been on this chart for over a week now, right? We were expecting to see if they couldn't get it, go down and then up, right? Back up into that trading range. It looks like that could easily be in the cards here right now for us. We get that clear rejection off of that low at 13,350. That clear rejection combined with a 1, 2, 3. This is looking pretty darn. It's still bearish, but it's looking really bad for the sellers. Let's put it that way. This is one of those scenarios where I have a hard time calling it a bull market right now because we really haven't jumped, right? We haven't seen that real, kind of short covering rally yet. I'm not sure I want to call this a bull market yet. I still got this as a bear market. But the most important thing right now, though, is this is looking really bad for those bears, right? If you're a seller right now, what's your option? Where do you go from here? In fact, if I was a seller, I'd be looking for a sell right above these highs up here. And so I'm thinking about this is, okay, if I think the sellers are waiting up overhead here right now, I've got this rising support trend line coming in. The sellers have a horrible time right now because they've already tried once, right? That didn't work. They're going to probably try again. And if they can't get some sort of small miracle on this to go back down to retest that low, I'll look for it here, but I'm looking for a chance here to be a buyer on this, to be very honest with you, right? Because I just don't think there's going to be a lot of profit potential here right now from what we know right now, right? Now, for all I know, this market, right, overnight, something comes out in Europe and the market tanks. But what we know right now, though, this is a very uncomfortable position here right now, right, for those sellers. So I'm not quite ready to call this a bull market, but I'm definitely looking for a sign now, right, of those bears starting to lose their grip. So first of all, it is a bear market. What would a sell signal look like right now? Well, this is that two-legged pullback pattern. We got a one leg, we get a two leg up and over, right, and we'll use that support trend line, right, as that level of resistance. Okay, so that's the sell. Now, if we get anything else besides that sell, right? If we get anything else besides that, for example, if we end up just collapsing down here right now, I can't do much down here. So if we end up collapsing down in and we get stuck down here, look for that 1-2 failure and just keep fading that move going back down to retest the low. The problem is going to be, the big problem here right now is the clear rejection off that major low. That major low clearly was rejected. Bears took their profit. That profit-taking rally here now has resulted in that higher low. That higher low is the big challenge here, right? If the sellers hold above it, they're going to wind up losing their grip here, and we're going to end up running. And that's kind of the plan next. Right? That's the plan next here for the buyers. The sellers need to get a little bit higher. They got to get below that trend line and then nice, strong signal, and we can sell that sucker back down again. Okay? Not going to be easy. It might not be pretty. If the market collapses back down, I don't dare sell down here. So if we do collapse back down here and we end up in that kind of rejection area here, I'm looking for selling opportunities here still because it won't be a bull market yet. It's a 1, it's a 2, it's a back down from there, right? Let those buyers try once, let them try twice, and we're selling back down to that low. What I'd really like to see, though, is that classic nested 2 try for the buyers. 1 try here. I'm expecting to see sellers up around that 13,600. I'm going to wait for that second. And what I really would like to see here is to see a trap here, right? A 1, a 2, a trap. That would be the bread and butter here. That would really be the good stuff. Almost like a little inside 2 try up here with a trap, because trap patterns are always my way of getting in just as that market is reversing. Traps are some of our favorite patterns to make sure we're not buying high. If you want to be aggressive with it, it's the 1, it's the 2, it's the failure. Right? And you're literally buying right off that trend line. A lot of times, though, those patterns are going to go up, trap, and back. And so that's what I'm looking for here tomorrow. I'm looking for that up, trap, and go. Okay, that's the gimme. That's the giveaway. Now, we may not get any pullback here. This thing might just run. And if it runs, right, if this thing really starts running hot here, we know where they're trying to go. If it starts really running, look for anything you can get your hands on, trap patterns, pullback patterns, right? If this thing starts to get aggressive on us as we rally higher, if this thing really starts getting aggressive on us, we'll have to look for those trap patterns as we go. Another pattern I'm looking for is going to be a spike in channel. Keep an eye out for a spike in channel pattern as well. That will be a great spot to be a buyer here for us as we rally back up into that trading range. So plenty of different ways to get long on this market. Really only one way or two ways to get short. One is that two-legged pullback. The other is going to be that range fading those breakouts. 1, 2, and back down from there. All right, guys? So very, very challenging here to be a seller right now on the euro. The big question in my mind is, will that challenging environment on this for the sellers, will that actually produce the rally that we're looking forward to here for that big short covering rally tomorrow morning? Don't forget, tomorrow morning, we get that big news at 10 o'clock Eastern time. We're going to be in our trade room tomorrow, getting all prepped up at 8 o'clock Eastern time. And as always, I would love to have you there with me. Don't forget, check out our free trial right here on the homepage of our website at schooloftrade.com. That free trial will include your free trading course along with a free pass to come out and join us as a guest in the trade room. While you're here, don't forget, you can always pick up the phone and call. Use live support if you have any questions about our 3 levels of membership that we offer to all of our clients here at SOT. And boy, oh boy, that time flies when you're having fun. It's already almost an hour into this video. How on earth do we make such a boring topic so exciting every evening on this nightly newsletter? That time just flies right by, doesn't it? If you love trading as much as I do, I hope you enjoyed this nightly newsletter. Now get out of here. Get some rest. Have some fun with the family, the friends, and the kids. And we'll see you guys tomorrow morning, 8 o'clock Eastern time. If we don't see you tomorrow morning, same time, same place tomorrow night with the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.